What is up, everyone? Hello and welcome to episode 0 of WagmiTV. My name is Soham, and I'm joined with my absolute homies. First and foremost, the Doctor, Armada, the NFT Lord, Garcia, and last but not least, the one and only, the All-American, Ev Smith. What's going on, guys?
What
How
is
we doing?
up?
How we doing?
Oh, how we doing?
Doing great. Great day in the market today, huh, fellas?
Unreal.
Oh, yeah.
So just a little bit of a context for our listeners today. First of all, thank you very much. Second of all, we wanted to create this podcast to basically chat about all things Web3. So that could be crypto, NFTs, DeFi, DAOs, or just general degen shit that we all like to fool around with at some point or the other, right? So, our friend group, we kind of started this a couple of months ago and found it super useful just because the world of Web3 is so vast and so hard to keep track of. And we've gained a lot out of it personally for all four of us. And so we kind of wanted to share this with the community, and, hopefully the community can continue to learn with us as we continue our Web3 journeys. And we hope to learn a lot from the community as well. So, without further ado, just like, Armada was saying, absolutely wild day today. I mean, this is honestly a really crazy day to be launching a podcast. I mean, if we just sit back here and take a look at this.
You got a
bad
chart
boy.
for us?
I got a chart. I mean, look at this. This is the biggest daily chart I think I've seen in months. I mean, since like what, right here? Like absolutely madness. So
This last run up, yeah.
Yeah.
I mean, it's crazy. It's crazy. So, I mean, what do you guys think? Like, is this just kind of a dead cat bounce that's going to get sold off again here in the next like month or two? Or is this something, we could maybe develop a little bit of a bounce and maintain, maybe keep going up? What do you guys think?
What do you think, Mama?
Yeah, I can take a crack at it. I mean, I feel like there's been tons of news all over the place, right? You have all this macro geopolitical stuff going on. Ukraine, Russia, who's putting all this money into it? Why is it not trading like, a risk on asset? Why is it going along with the NASDAQ, et cetera, right? So I think a lot of it's just a ton of conjecture at the moment. I try to listen to a good amount of people, and what I've heard kind of the rumblings is it was this Ukraine money, this money out of Ukraine, this money out of Russia, maybe even some oligarchs over in London, right? That was kind of what you would consider, I guess, the fuse that was lit. And it essentially started this perpetual funding rate that went super negative, very, very low, which essentially ended up in that.
That's just because they have all their funds frozen. Is that
correct? Yeah. So a lot of that, and I mean, I could see it coming from somewhere like Canada too, with everything that's going on up there, right? So I don't think we really have an idea of exactly where it came from, but those perpetual funding rates are very, very low, which kind of, right, short squeeze, your game stops. Everyone knows the meme things, right? So kind of a little mini short squeeze that popped it up like quite a bit there. So I mean, I know we were talking about this. It's not exactly super healthy, I wouldn't say, for the crypto market as a whole, but it is very exciting to see those big jumps, especially when, we've kind of been in a little bit of a winter, a little bit of a bear. It's cool to see that, that can still happen. We can still pop up like that. I really do hope we hold a little bit of support. And I think Alex will dive into a little bit of the support areas. I know he's the TA guy over here, so I can pass it over to him if you'd like.
Yeah, we can talk if we want to go a little bit macro here on Bitcoin. We can definitely talk about what the key supports are going to be.
It seems like, I mean, when I'm looking at the chart, it seems like we almost went from like short-term support to like we just candled straight up to the resistance like immediately. So it's like,
yeah. So right now we're trying to
crazy.
flip the 236 into support. So we're trying to flip 41.2 give or take into support. So you'd like to see it come up here. I mean, most likely it's going to get rejected here at 46.5. And then that's when it's going to be interesting, because we're probably going to see something like this where it maybe comes back, tests us a little, and then kind of fluctuates between here. It's eventually going to try this again. And this is what we were talking about before, Mata, like, does it go up and play between here, or does it, you know, get rejected around between 46 and 48 and then come back down? And then from that point, like after 41, like our next serious support, like you were saying, is 33. So like, that's kind of where like we're kind of playing like a dangerous game here, because if you do get rejected, there's not much support past 41 all the way down to 33. So that's kind of the kind of catch-22 we're rocking with right now. Like it would have been nicer if we saw something like this, right? Like where we kind of slowly like, oh, we got rejected once, come back here. Oh, now we stand on top. And then we start kind of, but we had that huge just one day right here. That was like, what I think you said 4 billion of volume or something like that.
Yeah, something like that.
Just like
Yeah.
craziness.
North of
Yeah.
there. It's crazy.
That's what
Yeah.
we're seeing on the support side.
Nice.
And so when you say it kind of loops up like that, that would be what you would consider kind of a more healthy breach of that level.
Yeah. So you never want to like, when it breaches and I'll share this again because it makes it easier to explain. So when it just like shoots right through support. So this is the one that it shot through today, or sorry, resistance. Like look how many, so you can see like right here was a critical point. We missed it. Boom. Right here, we try to come up against, we get it. And then we come up, and then again, we're falling below it. And then once we fall below it, we loop a little bit like that. But the problem is when you like just shoot right through it, like we did that basically like the exact same thing the first week of February right here. But like, it's not healthy because that's not a typical volume day. So you rather see like little candles like this, like slowly trend towards the upside. But you can see like only like it was up here for maybe like 5 days, and then it came back down to where it was before, you know? So this was almost like a fake out, you know, people thought we were going, but we came right back down to where we were. So that exact thing can happen right now. It's just whether or not people sell this dip and actually buy into the fact that maybe, you know, Ukraine's going to be a bigger issue moving forward, or do they say, you know what, you know, the bulls are going to come back, kind of like how Ben Cohen says. But you know, I rather it's better if it's a healthier move to the upside, kind of like with these candles.
Interesting. Yeah, definitely a lot going on macro wise too. Obviously, like the conflict in Ukraine, and then also huge Fed meeting coming up this month. Everyone is all eyes there. You know, is it going to be 50 bips? Is it going to be 25 bips? Are they going to kick the can down the road? Like no one really knows. I think maybe part of this like pop that we saw today also was due to maybe rates, you know, going a lot lower today. I mean, we went, I wonder if I have the chart. I wonder if I have the 10-year chart up.
I think I saw the same thing where they were saying that with this amount of like turbulence, it's going to be difficult for the Fed to raise rates on their scheduled basis. So
yeah, exactly.
Playing in there.
Okay,
definitely
yeah,
changes things up a little bit.
Yeah.
This is the 10-year chart today. So you can see we literally go from like 197 just straight down to like 187. We ended the day at like 1825. So, you know, rates rallying really, really hard.
And I guess what do we think the consensus is in terms of how many rates at what percentage are priced in right now, or is that even too hard to tell?
I've heard as many as like
Sam
six.
should take this.
I've heard as many as like 6 rate hikes, 7 rate hikes priced in on the year, which I don't really fully understand where those numbers are coming from, but I think it just has to do with the treasury yield curve and like where that's positioned at the moment. So, I mean, we'll have to wait and see. I think the March meeting is going to be really crucial. So, yeah, a lot to keep an eye on. That's for sure. That's for sure. But
isn't there always?
Yeah.
I guess that's one thing. What do you think then? Do you think that could be causing kind of the bump in some of these tech stocks that have been beaten, the bump in crypto, is people kind of expecting that maybe, hey, in March they're not going to raise rates like they thought they would? Is that something that would cause that as well?
Definitely.
I think it's definitely part of it. I mean, when rates go up, dollar gets stronger. Bitcoin and the dollar are like heavily correlated. So, you know, if the expectation is they're not going to raise rates as heavily as they were planning on, that could definitely, it impacts the dollar, so it'll impact Bitcoin too.
Makes sense. Yeah, a lot to keep your eye on. That's
No
why we
doubt.
run this.
Exactly. Well, one of the coins that's ran a ton today is AVAX, and our boy Armada here has done a little bit of a deep dive into AVAX, and we're all very curious because we don't know a whole lot. I mean, I've dabbled with it in DeFi, like here and there. I don't know if on the NFT side, like AVAX is that active. I know Solana is, but yeah, take it away, Armada.
Yeah, absolutely. And it's funny, all these alts, they're great and they can make runs. I'm a little bit hesitant to ever put money into something like that when Bitcoin doesn't feel super healthy. I feel like Bitcoin's got to be kind of showing strength before I start to really look at a lot of these more altcoins, unless, some of those blue chips, right? Maybe like Ethereum, I could see being, a solid investment. So it's just, for me, I just can't really grip that, because I know if Bitcoin can drop a little bit, it just, all these altcoins start to bleed really heavily against this. So again, NFA, not financial advice, but happy to go into AVAX for all of us. I know it's been one that's ran up pretty heavily over the last year. So had a great day today. So let's get into it. Just kind of like a very basic overview I thought I would go through with all of us, and then obviously do your own research. And if it's something that sounds interesting to you, definitely dive in after this. Feel free to shoot us any questions as well. We're happy to answer whatever we can, right? We're not necessarily experts in the space, but we try to get all this info and put it into one spot for you. So Avalanche, right? Powering the innovation of money is what they say. So it's a smart contract platform, much like Ethereum, kind of what you would call as one of those ETH killers out there, right? Along with some of the other L1s that have been super popular, like Solana, Phantom over the last year. But Avalanche was founded in 2018 by a Cornell professor. It was actually built by AVAX, which is a for-profit software company out of the United States. And the development, interestingly enough, was coordinated by the Avalanche Foundation, which is actually a nonprofit, which I could not locate exactly where it was based out of. I couldn't find a clear location for it. So if we're looking for red flags, maybe that's one of them, right? But Avalanche, it raised over 60 million over various token sales over 2019 and 2020. And really hundreds of millions since, as we can see in this massive run-up that Selm's showing us, which includes $230 million from half a dozen crypto VCs over the last couple months. So the main net of Avalanche actually went live in September of 2020, which you can kind of see a lot of action going right there in September, which is awesome. But it's technically still in development. So it's funny that they call it the main net. I know everyone kind of has their own way around this. We covered Solana a couple weeks back, which I'll probably do an update on here coming. But they technically consider themselves in beta, right? So it's kind of similar to that. They're still developing. And I think, Evan put it the best way a couple weeks back. Everyone's always in beta, right? We're always trying to get better. So I think nothing's different for Avalanche, right? But it uses a customized implementation of Ethereum's virtual machine for most of its dApps or decentralized applications. And so why is it unique? Why is it different? Why aren't people just flocking to Ethereum, right? It's an ETH killer. Why is that? And the answer is scalability, right? What Ethereum can't really grasp in a big portion around ETH 2.0, or what used to be called ETH 2.0, or the Beacon chain, and kind of how that's going to scale. This is essentially supposed to be that ETH 2.0, if not better already, right? So architecture, the consensus protocols, just general scalability options with something like Avalanche, right? Something that you'll see in a lot of these L1s is the ability to scale unlike Ethereum can, right? Which is why you're going to see often in chains like Solana, right? Things will go down because they're giving up a little bit of that security to allow themselves to move a little bit faster and push the envelope a little bit further. So as a whole, Avalanche consists of 3 blockchains. You can consider it the X chain, which is the exchange chain, the P chain, which is the platform chain, and the C chain, which is the contract chain. So just to go super briefly into it, the X chain is where Avalanche tokens are actually issued, right? AVAX, the native coin that we're all familiar with.
Oh, interesting.
Yeah, very interesting.
know
And
that.
this is,
I've only,
this is-
I only knew about the C chain. I was always wondered what the hell that was. Because you
exactly,
have
'cause
to,
the C chain's
yeah,
where the DApps are. Yeah.
exactly.
Yeah.
Yeah,
So
yeah.
is that how they introduce new? So is that where the unlocking happens? Is that how they introduce new tokens? Is through that first chain that you're talking about?
Correct. Yeah, that X chain or that exchange chain. And
Mhm.
then and that could process around 4.5 trillion transactions per second, which is pretty impressive. But the platform chain or the P chain is where the AVAX validators
That's per
actually
second?
stake,
That's per second. How many of those can do?
I think.
Yeah.
Let me check on that. Let me check on that.
Let's circle back, Life.
But yeah, I believe it is 4.5 trillion. But let me check on that and get back to you.
Yeah.
But P chain, right? That's where AVAX validators actually stake to secure the network, right? Which that's what makes it possible to create those custom blockchains, the subnets, the leverage Avalanche validators, all that. And that runs the Snowman consensus protocol, which can actually only process 1,500 transactions per second. So getting a little bit slower there. The C chain is what we're talking about, what we're all pretty familiar with. So that's where the Avalanche smart contract and dApps are deployed. So it uses a modified version of that ETH virtual machine that I was mentioning earlier. It's that standard blockchain, runs on that Snowman consensus protocol. Again, typically 1,500 transactions per second. So at the time that I was doing the research, which was, gosh, a couple weeks back at this point, they had just about, if not over 500,000 monthly active users, which is super impressive. The number of daily transactions was continually rising. And then Binance and Coinbase support withdrawals and deposits directly from and to that C chain. So it's super, super, super accessible, which I really loved that. And I know Soham's worked a little bit with AVAX, so you can probably,
Yeah, I mean,
highlight
my
that a little bit.
experience with AVAX is really like, it was very seamless. I mean, this was back, Time Wonderland days, the good old days.
The good old rug.
We'll have to do a segment on rugs.
The Dennis Rodman.
The Dennis rug.
For the pre rug days. But like, I mean, it was super easy, right? Like you just go on your Coinbase, you buy AVAX, you send it to your AVAX or your MetaMask that has, you set it up with Avalanche and you're ready to go, right? A lot of these other chains, like it's not necessarily that straightforward. And that's when I first kind of heard about the C chain, and it's super good context to understand like what the different AVAX chains are. But overall, like, very cheap transaction fees. Like I think you can do most transactions for probably like less than 25 cents, or maybe like a really complex one will be like 50 cents or something, but like nothing compared to obviously Ethereum, where you're spending an arm and a leg. And overall, like pretty fast too. Like I have seen it like congested like a little bit here and there, depending on if there's like a ton of people using it, but for the most part, really solid.
What's the ownership kind of distribution? I think when you covered Sol, it was like
Yeah.
heavy VC.
Yeah. So all of these chains, right, that have been doing really well are pretty heavily VC backed, including Avalanche. And actually, I can pull that up again. So Avalanche, back when we were looking at Solana, which was about 48% insiders or VC funding, Avalanche is 42%. So just below that, with some that were high were like Luna and Phantom were above 50%, which I thought was pretty impressive.
Yeah.
Because I feel like Sol always gets a bad rap, but everyone's kind of doing the same thing, So yeah, that is an interesting one. And a quick correction, it was 4,500 transactions per second, Evan. So thank you.
Like, brilliant, boy.
I had a T in my notes.
Why aren't we using this? Shit.
It's already better than the stock exchange. That's amazing. But super interesting is it has a max supply of 720 million. You'd love to see that. At least I love to see that in coins when they have a set supply there. So
Yeah.
just a little background on that. Half is set aside for staking rewards, which are estimated to vest over the next few decades. Of the remaining 50%, 30% are really going to Avalanche and their affiliates, which I didn't love. And then the rest were sold across those 3 ICOs that we talked about earlier. So the circulating supply has increased by more than 10% since September, which I believe was about 24 million AVAX. And so they have a really aggressive vesting schedule, which you can actually see in the price action pretty well. They had 2 unlocks that I'm really considering right now, which was the end of September and December, where they had exactly. They had about 1.7 billion dollars of sell pressure at those times. So it did negatively impact the price. And the next one to look at is the end of March, right? Is when they're gonna start to do that piece. So I'll be looking at Avalanche pretty heavily, probably the beginning of April. Granted, not financial advice, and if Bitcoin's doing well and looking healthy, I'll probably be looking at it somewhere in that April timeframe or end of March there, just to start to keep a little bit more track of that. But
what's the market cap rank on Coinbase for Avalanche?
Let's look that up. Actually,
I think
Sally, can you pull
Garcia
that up?
just had that up. It was like 21 billion or something as the market cap, but
is it top 20?
Yeah,
top 10?
Yeah,
it'll definitely be top 20.
Yeah.
Let me just do it real quick.
I don't know the exact ranking.
Rank 10.
10, yeah.
Nice.
It's really cranking up there. I remember in the summer and everything.
Sheesh.
Yeah, it's 21 billion, but like why Motto was bringing up the 700 million and why he likes that is because for like just comparison's sake, like ADA, so like Cardano, what everyone loves Cardano, right? You always hear about Cardano. Yeah, so I don't love Cardano, but
yeah.
So some people love to lose money, I don't love
the best stable coin out there.
Exactly. But like there's gonna be 35 billion. Actually, no, there's only 75%. There's gonna be 45 billion ADA in circulation as opposed to AVAX, just 750 million. So the point at which you reach a supply shock is way faster. So the demand without even a use case will be higher with AVAX. Just
well, it depends on how you dump. If you decided to dump a ton of coins, you're going to reach that supply threshold faster.
That's true.
But
yeah, which the dumps are interesting, right? Because then you see the price action like you do in AVAX here when they have those when they release a lot of those.
The last one
rewards.
dropped almost 60%.
Yeah, and that's granted that was with the market as well.
Yeah.
So how much of it was this versus that? But either way, I mean, something to look out for. Something to look
for
out
sure.
for. But as a why it's a popular alternative to ETH, I think is the main point of doing research on this, right? So speed, extremely low fees. It's all burned and done through AVAX, as Soham can share with us at a later date, and it's EVM compatible. I mean, it's attracted over 2 million users and counting, and there's over 500 dApps on there already. So lots of developer use. And the DeFi protocols, I know Soham loves the degen DeFis. It holds over 10 billion in total value locked. So
there were some
of which was Aave, which you do love as well, I believe, and that was the largest of the protocols.
Just to be clear, Aave is not degen. Aave is a great project,
I know, of course.
But all those ohm forks, like the one that had a number of APY it's not even a word. It's not in the English language. It's just like 7 quadrillion million quintillion heptillion like
APR.
Yeah. APY. Yeah. Absurd.
Yeah.
And I guess to finish it out, right, one interesting thing when I was doing research is they haven't finished a lot of what was on their 2021 roadmap. Some of those things which were called like pruning, adding more Avalanche wallets, intro of what they call AVAX bridges. A lot of these things weren't done, so they're still working on them. And 2022, the roadmap's not yet out. So we'll have to do a quick update down the road when they do release that and kind of comments on everything that they've done in 2021 and what updates they're making. But really, I mean, I guess that's a concern for me. It doesn't feel like there's a ton of great transparency there. Obviously, what was it called? Ava Labs, right? Not being able to figure out, or not Ava Labs, it was Avalanche Foundation, the nonprofit, not being able to figure out where they're located, things like that, right? Those rub me a little bit wrong. We all love docs teams and transparency and everything like that. So that's always tough in the space, but keep a close eye on them. They could come out of nowhere. Tons of competition in the space is the next, right? I know a lot of people are like, pick your horse. Which one are you going to bet on, right? Avalanche, Solana, ETH. Who are you betting on, right? To actually take that to the next level. So competition's another piece. And what I heard a lot of people say is they seem to be following trends rather than setting them, right? So they're kind of lagging a little bit behind. They're doing very well, and they're doing what they're doing very well, but they're not necessarily developing beyond what others have already done, right? Phantom's got tons of competition from Phantom in the DeFi space. Solana is doing amazing, pulling in tons of developers, right? So it feels like they're lagging a little bit behind, although they're doing very well, and I like them as a chain. There are a couple things that might be a little bit of a red flag, but all in all, I think AVAX is great. I'd like to see a little bit more transparency. I'd like to see how they develop, and I'll be looking for that March, April timeline to see, how we're doing and if another dump happens because of the rewards drop.
Nice.
Absolutely.
Yeah.
Makes a ton of sense. Super interesting stuff. Definitely, I learned a lot there.
I didn't know anything about AVAX before that.
Yeah.
Yeah, let me know if you have
That's
any
awesome.
questions. I'm happy to dive into them. Obviously, I won't probably have them on this call, but we can always highlight it on the next one.
100%. All right. So I think kind of, another thing that this group has been pretty focused on recently is the NFT space. Garcia kind of leading the pack in terms of researching NFTs and Evan also getting his feet wet. Me and Armada are still trying to play a little catch up. Still trying to wrap our minds around the concept, honestly.
Yeah, for the group, I just degened in to one because of these
There you
guys.
go.
So.
Oh yeah. Let's go.
But I think, Garcia, did you have some like NFT trading information and stuff?
Yeah,
that you were looking into?
Yeah, so like the one of the hardest parts, like when you first start trading NFTs, is like to actually find like common sense and like try to make sense of like what's actually happening in price action. So like so right now we're looking at a chart. For those who can't see the chart, we'll kind of talk through it. But this chart that I'm showing was posted by one of the alpha team members from Bears Deluxe, and he just kind of shared it out and it was like, hey, you guys should be paying attention and focusing on what category you're in. So basically what we're looking at is a very, very basic chart with basically like consolidation periods and then moves to the upside, consolidation, move to the upside. But there are very, very like distinct moments within an NFT collection's history and timeline that people like to pay attention to. So first of all, if you're new to the NFT space, how NFTs come about is you mint them onto the blockchain. So a project will say, hey, it's 0.05 Ethereum to mint your NFT on the blockchain. You'll mint that. Usually that public price is actually higher than the whitelist price that they've offered to a select group of wallets. So whitelist is typically collaborations they've done with other projects or folks who know, people from that internal team that actually run that project. So pre-mint and public mint are your kind of lowest risk entries to a project, because it's really, really rare that the price of the NFT will go below the mint price. But 9 times out of 10, maybe even 99 times out of 100, once the actual NFTs reveal, they're going to dump and probably lose about, 25 to 50% of their value, just because people are either really happy with what they got or upset that they didn't get, you know, like either a rare one or they just don't like the art, whatever the case may be. Usually there's a washout there, and new people will come in and say, you know what, I'm going to buy this dip. I like this project. I like the art. Similar to what we did with the Wulfz project, which Evan's going to talk about before, but that ran up all the way to 0.4. We waited for it to come back down around 0.2. We all bought around 0.2. So it's like, you know, it's probably in this phase of community building, right? So there are just kind of distinct areas that you always want to be watching. So when you're like monitoring an NFT project, you always want to be looking at, like, you know, they're following on Twitter, how, you know, what kind of is, you know, the main news around them, like what are they actually offering that's unique. And so once that kind of post reveal consolidation happens, the next pump doesn't happen until the, you know, team or community actually does something, right? Like maybe they launch a staking, maybe they launch, you know, a partner collection. Something has to catapult it to the next kind of plateau. And once you do that, you start kind of bringing in, you know, people who want to be holding longer, people actually interested in the community, people who want to like actually be in the Discord and talk. So every single consolidation period, you're kind of eliminating these people who are like not really that active, or like who just want to sell and get their ETH back. And the idea is, as you hold the project longer, if it's a strong project, you know, the stronger the community and ownership percentage is going to be. But essentially, you kind of want to need to decide from the beginning, is this something that you're going to be holding for a long term? Do you enjoy the art? Are you okay if it fluctuates in price? If you just want your money back, 9 times out of 10, you want to sell that NFT and flip it pre-reveal. So if you're not really vibing with the project, always flip it pre-reveal. You almost always guaranteed a profit if you're going to mint it. So that's kind of like a basic breakdown. You know, it's kind of hard to, like, if you can't see this chart, it's kind of hard, but any questions on that so far?
I know you talk about ownership distribution a lot.
Mm-hmm.
And so, you know, obviously when you're looking at this chart, this is like broad trends, like it's not going to exactly map out to this.
Mm-hmm.
But is the idea that if the ownership distribution is like more distributed or stronger, basically, like those dips in terms of like post reveal and like post hype run up, and like those dips will be inherently less because there's just like less whales dumping on you?
Yeah, so I that's a great question. So I should have been a little bit more descriptive. So all these periods, like let's say the uptrend and then the consolidation period, these are all going to be different lengths of time depending on the strength of the project, right? Like I've seen projects go from right here all the way up to here, just because like it's you know, really, really solid project. It's been built like, you know, for 6 months, a year, whatever it is, they've been working on the project. But in terms of actually like adjusting the ownership percentage, that's usually what's happening throughout these consolidation periods. So like here, you know, you might be like 20% of ownership after reveal. And then as new buyers come in, you know, the ownership distribution gets a little bit better. But the whole idea is that the more people who have at least one, as opposed to a bunch of people having like 20 or 50, you're more insulated from like a drop like this, right? So it might be like this instead of dropping all the way down here and then consolidating. So the whole idea is like, it's going to kind of shield you from losing 50% of your portfolio, you know, in 2 days or whatever it is. So that's kind of why ownership percentage is always like in the top 5 things that I look at, because if it's just a bunch of whales holding, they're just going to wait until it gets to their sell price and they're all just going to dump on you. So that's kind of what you want to watch out for with ownership percentage.
And then the other thing is, you know, the team could put together better partnerships that you're going to bring other communities into your community that are some of those blue chip, you know, NFT collections.
Right.
And so you're bringing in those holders that have been in the space for a while that don't feel that pressure like you're talking about, Sia, to get it, to flip it, get it out of your hands quick. And so, you know, like you're saying, like it could hop up another level. Like that's something you engage the right community, and all of a sudden it goes from, you know, new to blue chip real quick.
Mm-hmm. Yeah.
Yeah.
And
I feel like that's kind of, go ahead. Sorry.
Oh, no, you're good. You're good, bro.
No, I was just saying, I feel like that's a little bit what Evan was saying is kind of like what that Scuxverse thing is, right? You're tying yourself to a super successful project.
Right.
That's essentially what you're doing with that NFT, right? You're tying yourself to NFT worlds, which is, that's interesting. I like that.
Right. And then your price basically just becomes a derivative of that broader project. Yeah. Yeah.
And to Evan's point, like a lot of those people, it's all about like one of these. So I don't know if you guys remember that project Global Citizens or whatever that I flipped maybe a few weeks back. But like as I was in the Discord, I could tell there were just a bunch of like newbie NFT people and like a bunch of people who were just new to the space. Like they were asking really, really basic questions. And it's not always a red flag, but like for me, long term, like I thought they were gonna freak out after the post reveal dip. And they did. Like so I sold it for 0.25 and went all the way down to 0.04 after the reveal. And they were all just like, you know, you could tell all they were doing was talking about the floor. That's like the biggest red flag. If people are just talking about the floor, then these people are going to flip immediately when it hits their sell point. They're all just going to list it. Yeah. So it's like, you know, you don't want communities like that. You don't want people who are all trying to make a buck. Like obviously you can't always eliminate the flippers, but most of the flippers are going to exit like in this area, you know? And so usually by this run up, you're having most of the people that want to be there long-term for a potential, you know, blue chip type material project. Because these are the people who don't want a 2x, they don't want a 3x, they want, you know, 5 to 10x long-term, and they're willing to hold the bag. Like they don't care. They have, you know, extra ETH, right? So that's kind of the projects you're looking for.
So humor me, where would you say, not financial advice, none of that, not hold you to this, but where would you say like the ones we talk about commonly are, right? Bears, Wulfz,
Bears Deluxe,
NFT Worlds, like where do you think they'd be at?
Wulfz, I think, is right here. So Wulfz are kind of waiting on to see how like VX comes out. We want to see the burning mechanisms, like everything is there, like all the foundation is there for it to be super, super successful. But we need, so like this is a key point, right? This is what's kept us down in Wulfz, is that every time we run to like 0.27, someone's trying to take their profit. So like every time we run up, someone take, and that comes because Wulfz has been consolidating for so long. So people who minted are like, you know what, I don't want to hold this bag anymore. Let me take the 2x profit. Let me get out. You know, I'll go move to something that moves a little faster or something. And so listing pressure is something you always want to look at, because like if there's more listings than sales coming in like on a weekly basis or on a daily basis, it's not going to move anywhere. And so even though there's not that many Wulfz listed at any moment, once it moves a little bit, people list, and that listing pressure is going to get less and less as we keep rotating. So you're going to see the Wulfz floor probably steadily, you know, climb up like this. And then it's gonna rocket. Like once it gets to like, you know, a certain level where no one wants to list anymore, because there's only like 110 listed, I want to say. So it's gonna reach a point where no one wants to list anymore, and then you know you're talking about, you know, maybe a 2x in a couple of days. You know, so it's like it's hard to time it. You know, that's why it's better just to stay in. NFT Worlds and Bears Deluxe, I'd say, is probably here. I mean, Bears Deluxe and NFT Worlds are under 5% listed, I think. I mean, so is Wulfz, right? But like Wulfz just launched like 3 months ago, whereas Bears Deluxe has been out for 6 months. NFT Worlds has been out for 6 months almost. So they have a little bit more time in the market. Granted, that's not a lot of time. NFT World